TCI Group logistics companies Transport Corporation of India and TCI Express have reported their Q2 earnings. While TCI Express had a stellar quarter as it delivered a strong top-line growth, in contrast, Transport Corporation of India reported a mixed set of numbers. Let's do a three-point analysis on what do the numbers tell us and what should be investor strategy on them. 1. What are the highlights of Q2 FY19 for Transport Corporation of India? Well, if we see the Q2 sales of the company rose 19% to 621 crore rupees. EBITDA came in flat at 53 crore rupees despite the higher top line. Margins declined 100 basis points year-on-year to 8.6%, and a sharp increase in fuel prices and change in business mix dragged the operating margins. Profits also came in flat at around 26 crore rupees as the increase in operating costs weighed on the margins. All the verticals posted strong growth year-on-year, led by Seaways segment, followed by freight and supply chain solutions. 2. What do the Q2 numbers of TCI Express tell us? Well, if we see revenues of TCI Express increased by 21% to 247 crore rupees. EBITDA came in 38% higher than last year at 27 crore rupees, while profit after tax grew by 25% to 16 crore rupees. Revenues continue to be on an uptrend as the company delivered fourth consecutive quarter with top-line growth in excess of 20%. This has been aided by strong demand from pharma, automobile, retail and the SME sectors. Operating margins expanded to 11%, led by technology integration as well as changes in the distribution strategy. TCI Express has been able to maintain margins in spite of the rising fuel prices, as it has been able to selectively pass on the crude-related cost to its clients during the quarter. 3. What's the outlook on the companies and what should be investor strategy now? Well, overall, Q2 business volumes during the quarter was impacted by truckers' strike in July, Kerala floods in August and the delay in festive season. But increase in economic activity has been driving the demand for logistics industry. Recent government initiatives such as dedicated freight corridors, Sagarmala and Bharatmala projects, along with GST, e-way bill and change in axle load norms is aiding the growth as well as formalization in the sector. We remain optimistic on the earnings growth of both these companies and expect them to deliver healthy earnings over the next couple of years. From a valuation standpoint, TCI Express trades at 25 times FY20 price to earnings multiple and appears priced to perfection. Investors with a medium to long-term view should look at accumulating TCI Express on dips given its strong fundamentals, low leverage and also market share gains from competitors. TCI's quarterly performance, on the other hand, was fairly robust as well despite number of adverse factors. The margins are expected to recover in the short to medium term as well, and this should further boost the profitability. TCI trades at a significant discount to its sister company TCI Express and offers a fairly attractive long-term investment opportunity with a significant scope for re-rating.